remember back in early December, before this market's hideous January sell-off, we got some huge news. The chemical giants Dow and DuPont were planning to merge and then subsequently break up the combined entity into three separate publicly traded companies. Both stocks are now well below where they were when the news came out. And that's why I think it's the perfect time to stress just how much I believe in this deal. Hence why we own Dow Chemical from my charitable trust, which you can follow along from bulletins and actionalertsplus.com. We just did the big weekly wrap-up. So what makes me like this merger and then breakup plan? Why am I so confident it's going to create a tremendous amount of value for shareholders? Simple. While DuPont CEO Ed Breen only took over that role in mid-October, he's going to become the CEO of the combined company. And this man is a master of breaking up businesses in order to unlock value. The idea has been met with some skepticism on Wall Street. I mean, come on, the guy just took over as DuPont CEO a few months ago. Very little experience in the chemical space. Be expected to run the combined Dow-DuPont? To which I say, this is not all about chemicals. It's about breaking up the merged entity into three separate companies that together will be worth more than the whole. And there's nobody I'd rather have overseeing this split than Ed Breen. The reason? Just look at how much value he created through the same strategy as the CEO of Tyco. Breen took over Tyco in July of 2002. He left in September of 2012. He's still the chairman, though. Now, before Breen stepped in, Tyco literally spent decades growing its business via a seemingly endless series of acquisitions. The company was the quintessential roll-up. But by early 2002, cracks were beginning to emerge in this business model. And, of course, there was Breen's predecessor, the unbelievable Dennis Kozlowski, the poster child for corporate excess, who, among many other scandals, basically raided Tyco's bank account for $82 million in unauthorized bonuses and was ultimately convicted of looting the company in 2005. He only got out of prison last year. Needless to say, when Koz resigned in June of 2002, Tyco was in pretty dire straits. Stock was in free fall. When Breen stepped in, he first righted a leaky ship, bringing him back from the brink of bankruptcy, and then he oversaw perhaps the most successful set of breakups in stock market history. In 2004, he sold off 21 different businesses for roughly $500 million. But it was in 2006 when Breen made his biggest move, breaking Tyco up into three separate publicly traded businesses. Sound familiar? Tyco Healthcare, Tyco Electronics, now known as TE Connectivity, and the remaining Tyco International, where Breen remained at the helm. Then in 2012, Breen broke up the rump of Tyco International into three separate businesses yet again. He spun off the flow control business, sold it to Penair. He split off the security business as ADT Worldwide, ADT symbol, yeah. And he kept the fire and safety business under the Tyco International banner. This guy is a master of breakups. And if you want to understand why I believe he can work miracles at Dow-DuPont, which unlike Tyco before Breen stepped in, are both healthy companies, you will need to look at how much value his multi-stage breakup with Tyco has created. Just how much exactly? We went through it with the staff, and I have to tell you, I was just shocked at how much value there was. Let's go over the numbers. Okay, when Breen took over, Tyco was trading at $13.51. In 2006, he spun off Tyco Healthcare. That became Covidien, which was then bought by Medtronic. And he also spun off what became the TE Connectivity we mentioned. Right now, Tyco International is trading at $35.41. But if you take into account the intervening stock splits, anyone who owned the stock when Breen took the helm would now have two shares. So let's call it $71 from Tyco itself. Then there's the Covidien spinoff that would be worth $29.43 per share if you held it until it was acquired by Medtronic. Oh, and let's not forget, before Covidien was acquired, it spun off its drug business as Mallinckrodt, giving you one share of the new business for every 8 shares you own in Covidien. With Mallinckrodt now at 69, that translates into $8.66. This is all, don't worry, it'll all come clear. Then there's the TE Connectivity spinoff, and you would have gotten 1/4 of a share in 2006, so it's current at 57. That works out to $14.42. Now, you add those three up, and we're already at $115 per share. But remember, that was just the first round of spinoffs in 2012. Breen broke up Tyco yet again in 2012, so there are two more components to account for. There's that security business Breen split off as ADT Worldwide, and that was recently sold to Apollo. It's now trading at $40 and change. You would have gotten half, so let's call it $20. And with the spinoff of Tyco's flow control business, followed by its merger with Penair, you would have picked up a little less than 24% of one share in the new Penair, $11.65. All right, so now let's add them all up. It's a little arithmetic. Put it all together. And if you own Tyco from the moment Ed Breen took over through today, thanks to all these breakups, you'd now have holdings worth roughly $146 a share. Remember, that's up from $13.51 when Breen took over. throw in all of the value of all the dividends paid by Tyco and its various spinoffs, and then you'd have something worth $179 a share. Do you know what this translates into by this guy, Breen? A 1,228% gain since this man took the helm of Tyco in 2002 and steered onto a new path. Put that in perspective. Let's say you invested $10,000 with Breen in the summer of 2002, and all you did was hold Tyco and all of its spun-off bits and pieces. You'd now have a set of investments worth over $120,000. Boy, the stock market's amazing, isn't it? Isn't that remarkable? I mean, that's 14 years. So here's the bottom line. Ed Breen created a tremendous amount of value by breaking up the colossus that was Tyco into increasingly smaller and easier to understand pieces. And we just quantified how much it was worth to you. I believe you can do the exact same thing by breaking up the planned Dow-DuPont behemoth. That's why I'd be a buyer of Dow Chemicals here, especially since it's down 11% since the deal was announced and had a really good quarter. And you'll be participating in what I regard to be the son of Tyco merger, while being paid to wait with that terrific yield that Dow offers. With Ed Breen taking charge of the combined entity, I think it's a steal. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.